Hi everyone, today we'll discuss India's 24 related party disclosures. The objective of this standard is to ensure that entities' financial statements contain the disclosure necessary to draw attention to the possibility that its financial position and profit or loss may have been affected by the existence of related parties and by transactions and outstanding balances, including commitments with such parties. The standard is applicable in identifying related party relationships and transactions, identifying outstanding balances, including commitments between an entity and its related parties, identifying the circumstances in which the disclosure of the above items is required, determining the disclosures to be made about those items. This standard requires disclosure to be made in consolidated and separate financial statements of a parent, venturer, or an investor in accordance with Ind AS 110 consolidated financial statements and Ind AS 27 separate financial statements, individual financial statements of the entity. Related party disclosure in conflict with confidentiality aspect. Related party disclosure as laid down in the standard do not apply where providing such disclosure would conflict with the reporting entity's duties of confidentiality as specifically required in terms of a statute or by any regulator or similar competent authority. Example, banks are required to maintain confidentiality in respect of their customers' transactions. Intra-group transactions: related party transactions and outstanding balances with other entities in a group are disclosed in entities' financial statements. Intra-group related party transactions are eliminated, except for those between an investment entity and its subsidiaries measured at FVTPL in preparation of consolidated financial statements of the group. Related party meaning and relationship. A related party is essentially any party that controls or can significantly influence the management or of operating policies of the entity that is preparing its financial statements during the reporting period. A related party transaction is a transfer of resources, services, or obligations between a reporting entity and a related party, regardless of whether price is charged. Classification of a related party: a person or a close member of that person's family is related to a reporting entity if that person has control or joint control of the reporting entity, has a significant influence, is a member of key management personnel of the reporting entity. An entity is related to a reporting entity if any of the following conditions applies. The entity and the reporting entity are members of the same group. One entity is an associate or JV of the other entity. Both entities are joint venturers of the same third party. One entity is a JV and other entity is an associate of the third party. The entity is controlled or jointly controlled by a person in A. The entity or member of group of which it is a part provides key management personnel services to reporting entity or to the parent of the reporting entity. For related party mentioned above, a person also includes close member of the person's family, including that person's children, spouse, domestic partner, brother, sister, father, mother, children of that person's spouse or domestic partner, dependent of that person's spouse or domestic partner. Key management personnel are those persons having authority and responsibility of planning, directing, and controlling the activities of the entity directly or indirectly, including any director, whether include executive or otherwise, of that entity. Parties not considered related parties. Two entities simply because they have a director in common or members of KMT in common or because the KMP of one entity has significant influence over the other entity. Providers of finance, trade unions, government agencies, a customer, supplier, franchisor, distributor, or general agent with whom an entity transacts a significant volume of business simply by virtue of resulting economic dependence. An entity shall disclose key management personnel compensation in total and for each of the following categories: short-term benefits, post-employment benefits, other long-term benefits, termination benefits, share-based payment. If an entity takes key management services from other entity, it is not required to follow the above disclosure. At a minimum, the disclosure shall include the amount of transactions, the amount of outstanding balances, including commitments and their terms and conditions, details of any guarantees given or received, provision for doubtful debts, the amount recognized as bad debts. The following are the examples of the transactions that are to be disclosed if they are with the related party: purchases or sales of goods, purchases or sales of property, rendering or receiving of services, transfers of research and development, transfers under license agreements, transfers under finance agreements, guarantees or collateral, commitments, settlement of liabilities or on behalf of entity or by the entity on behalf of related party. This brings us to the end of the session. Please do like, subscribe the channel. Thank you so much.